Hey guys, and welcome back to another cryptocurrency video. Bitcoin is on the verge of getting rejected at a critical level, which could spell a painful spell ahead for the crypto markets. The wider markets continue to be nervous about a recession. We're going to break down the key levels. Smash up likes. Don't forget to subscribe. As always, check out the links in the description. As you guys can tell, my voice is still a little bit rough. I'm still on the mend, but I've got to give you guys these updates. And as you can see right here in the charts, Bitcoin is coming up to its daily EMA ribbon. And you can see here, it's been very, very tentative over the last 5 or 6 days here. You can see we had our initial break out of the pattern at this point, and then 1, 2, 3, 4, 5, 6 weak days here with no real impulse move as we head towards this horizontal line, which is 17,600. Why is the 17,600 level important? Those are the June lows. Let's go back here on the chart. So that's where we are right now. And we go all the way back here. That was the June low at that 17,600 level. So we created that low. We tried to work our way up to 25,000. We came back here. We broke down on the FTX news down to 15,500. And now we've got our impulse move into our EMA ribbon, but we've not shown any significant volume. We haven't shown any significant pump here on the candle price action to suggest that we can really get for this 17,600 level. Important level that I continue to look at. Until we broke at that level or we got rejected, we don't know what our next level is going to be. So hold your breath for this level. And what's going to determine it is a bunch of macroeconomic elements as well. Wider macroeconomic market to see how we're responding here, because we need to know what is the Nasdaq doing. And you can see here 2 days negative here of the Nasdaq, bringing it back to its daily EMA ribbon here as markets start to become fearful again. Yes, markets are becoming a little bit fearful. You see extreme fear back again. 25 dropped slightly from 26. Remember, last month was at 40 before the whole FTX issue kind of started to fall out of action. You can then see that the Dow Jones has fallen again today, down 0.75. Remember, you're down about 2% yesterday on the Nasdaq. That is now being followed up with another 1.5% down today as markets are still worrying about a recession next year, right? The Fed is going to have to go ahead and do what it takes to bring down some of these strengthening indicators which show that the economy is still doing all right. Remember when we touched base last week? When I left you on Wednesday, we had the private ADP figures, and it showed that the economy was doing pretty good, right? As in the interest rate, it showed that the labor market was softening, that Jerome Powell's interest rate hikes were starting to take effect. And then we had Jerome Powell come out giving a really dovish conference, which we covered off together as well. And the market was like, hang on a second, we must be getting that 50 basis point pivot at the next meeting, which is December the 14th. We're just about here, 7-8 days away. Right? So markets got really excited. But then that Friday, we got the non-farm payrolls, which was complete opposite. Normally the ADP jobs report and the non-farm payrolls normally are correlated. In this case, the non-farm payrolls showed that the labor market is still very tight. You then had your ISM figure come in the other day, which showing some good strength yesterday on the ISM figure. Again, all pointed to the fact that the economy is still holding up pretty well, which gives Jerome Powell more runway to continue. If you head on over to the Fed Rate Monitor tool, you can still see that the market is broadly expecting 50 basis points, but that convicts some softening in the market. And the market's like, hang on a second. Jerome Powell might be left in a position here where he has no other choice but to throw us into a recession in 2023. And that is why you're seeing a lot of skittishness in the markets right now, heading into this December period. Don't be surprised to see a lot of volatility start to really reduce towards the mid and late end of December as people start to go on holidays. But also, one important thing is if we look at the charts again here, what are we seeing? Well, we've just seen 2 days down there on the Nasdaq, which I just shared with you. And what have the last 2 days here been on Bitcoin? It's been one red day yesterday and a slightly green day today. So that is one thing I have been monitoring over this last week, is we have indeed started to see a decoupling approach. So what we're going to do now is we're going to look at all the different time frames just to see what is the health here on Bitcoin. So if we look at the hourly, you can see here on the immediate term, we are facing resistance from the hourly EMA ribbon, right? That's understandable at that 17,000 psychological level. That's going to be a key level here. You're seeing some support here from the 200 exponential moving average on the hourly, but we're starting to get pinned in between those. So that's going to be an important level here on the hourly. If we move over to the 4 hourly, you need to get some support here, right? Yes, you've got higher lows and higher highs, but you need to now rotate and post another higher high about here for Bitcoin to continue its march on towards 17,600. If we come back to the daily chart, we just looked at that, right? We're running into our daily EMA ribbon. We need some strength. We need some strength led by the 4 hourly, which I just showed you, to help us break through this level and start working our way upwards took past 17,600 and onwards towards 18,000 level where the channel begins, which we were monitoring. And then if you look at the weekly, this is the one that gets me a little bit more worried, because when you look at this weekly chart, what do you see? You see a big fall, you see consolidation, fall, consolidation, fall, consolidation, fall, and then again, we're in this consolidation period. So the question now arises, you can clearly see by the EMA ribbon, let's not be delusional here, that the bears are in control. We're in a bear market right now. Everybody understands that. And if you look previously at the weekly consolidation, this one went on 1, 2, 3, 4, 5, 6, 7 weeks of consolidation before dumping back down. This one went on for 1, 2, 3, 4, 5, 6, and now we're in our 4th week of consolidation. So the question is, are we going to get 1 more 2 weeks of consolidation before the bears come in with another horrible candle, throwing us back down to the downside to test some new lows at 15,500? That is what I'm seeing here in the charts. That is what I'm preparing for personally in the charts. Let me know in the comments, guys, how do you feel about the Bitcoin price action right now? And what are you doing to prepare? A lot of people are now starting to, place their bets and plan their ideas for 2023 and what they expect the market to be doing. One thing is for sure, we need to wait for the next CPI reading. And the next CPI reading comes out just before the FOMC meeting. That is going to give us the final piece of data we need to know to decide, are we going to get 50 basis points at the FOMC meeting? Or are we going to see 75 basis points? We will get that figure on 30th of December, a day before the FOMC starts on the 14th. We will be covering it off live together. And again, if that inflation number shows that Jerome Powell does have control of core inflation particularly, and it's coming down, then maybe that will give him the final confidence, despite what the non-farm payroll says, despite what the ISM number says, despite what GDP showed in terms of positive Q3 GDP preliminarily. Will that give him the confidence to say, you know what, despite all that, I think we're really heading towards a critical point, because that's what he was saying at his meeting. He was like, I'd rather not hike too fast, because that's not, it's not, you can't unwind that. I'd rather go slower, but then keep going for longer. That way, squeezing the economy and getting the action he wants. So he'd rather slow down his hikes. And I think that was him giving us the message that, look, don't think you're out of the woods yet. We still got a long way to go. And I think he's right. 7.7% headline inflation is no joke, right? But we are heading the right direction. You can do a 50 basis points and then plug on with more 50 basis points if he needs, as opposed to just going 50 basis points, 25 basis points, we're done. So, and he did allude to that. He did allude to the fact that we need to focus not on the rate hikes, but how long we hike for and to how long we keep it there once we get to our terminal rate. So I think the market needs to shift what it's thinking about, not just from this, oh, it's 75, oh, it's 50, but where are we going to get to? What's that terminal rate? Is it 5%, 5.2%, 5.5%? And then how long are we going to have to stay there based on what the economy is saying? Hope you guys enjoyed this video. Don't forget to smash the likes and subscribe. Check out the links in the description. Don't forget to take advantage of that TA course, hijaz.uk/TA. Getting a lot of amazing messages from you guys who have managed to work your way through it. Now is the best time to be learning. What is an EMA ribbon? What is a head and shoulders pattern? All of this knowledge you take the time to learn right now will pay dividends literally in the next bull market. So take this time while the markets are sideways, whilst they're not doing much, whilst it's cold outside here in the winter here in the UK, to learn, to work through that course and understand, that these skills are what are going to carry you through the next bull market. Thanks for watching, guys, and I'll see you in the next one.